If you are looking for a mobile wallet to hold and access your crypto, you need to go to argent.xyz and download their smart contract wallet app right onto your Android or iOS device. Argent is the most secure way to hold money on your device while still being able to access DeFi services that we all know and love on Ethereum. Through Argent, you have one-tap access to the beloved DeFi apps like Compound, Uniswap, Aave, and you can even invest directly into some yield-generating assets right from your Argent wallet. Crucial to maintaining security over your assets is Argent's Guardian service, which allows you to use a friend to make sure that you can always restore access to your funds in case you were to ever lose your phone or for your device to break. You can also use a local hardware wallet to ensure that you can always restore access to your funds yourself. One of Argent's newest features is their ability to route trades through 10 decentralized exchanges, including Uniswap and Kyber, to make sure that you are always getting the best trade on your assets. Similarly, pushing the fold on what we can do in Ethereum and DeFi, Argent has replicated some of the legacy financial services that you would expect from your bank, but put it directly into the hands of the user, such as send limits and whitelisted accounts, ensuring that if anyone were to be able to access your funds in your Argent wallet, they could only send up to a certain amount and only be able to send them to approved addresses, which is creating one of the most safe environments to hold your assets in, which is why people have put millions and millions of dollars into the Argent wallet that they use on their device. In order to see the Argent wallet in action, go to argent.link/bankless and download the Argent wallet on iOS or Android today. We're also brought to you by MONOLITH. MONOLITH is your cool new DeFi account, your DeFi savings account, your DeFi checking account. Except the cool thing about the MONOLITH DeFi account is that it gets software updates, right? You actually get to increase the usefulness of this over time. So here are some of the features. MONOLITH is a smart contract wallet with a lot of the features that you would expect if you've come to know DeFi and what it is. You can add money to it. You can put that money to work in Compound and accessing yield. But you can also swap through Uniswap. What was cool with MONOLITH is that they will send you a very sexy MONOLITH Visa card that connects to your MONOLITH smart contract wallet on Ethereum. So it's a really awesome tool to live a bankless life with a savings account that gets software updates. So this is something that you're never going to find out in the real world, but you can still do real world things with real money, like buy your groceries. So that's just fantastic. Coming soon to MONOLITH, actually already here to MONOLITH, is now you can buy DAI and get it sent to your wallet directly, right? So it's also being an on-ramp. So you don't have to go through your centralized exchange like Coinbase or Gemini or wherever. You can just go straight from your bank account right into your MONOLITH checking account smart contract wallet. So check them out at monolith.xyz.
Bankless Nation, welcome to another State of the Nation. This is number 25. David and I have already had a very full day, but it is an exciting day. This is the day that ETH2 launched. We are going to talk about that. We're also going to talk about probably the best report we've ever read on Ether in this space. And we're bringing on the analysts who actually wrote it, Ryan Watkins and Wilson Withiam from Messari Crypto. First, I want to ask you, before we get to the guests, before we get to the agenda, David, how are you doing today, man? Are you a little tired? You had to wake up pretty darn early to see the launch.
Yeah, I woke up at 3 in the morning because the ETH2 launched at 4 in the morning. But I was smart and I went to bed at literally 8 p.m. last night. And somehow I managed to make that work. So I'm actually just like a bundle of energy right now. Like today's the day. Like today's the day that ETH2 is here. And thank God it got out the door with all systems go. It's like all the blocks were green. Everything went out without a hiccup. And so, today's just a good day. Can't complain.
That was awesome. It was a lot of fun to live stream that. Guys, if this is your first State of the Nation, we do these every Tuesday. We stream them live on YouTube at 2 p.m. Eastern time. We drop that in YouTube as well, but we also put it on the podcast so you can listen to it. And our goal here is to talk about what's happening right now. And right now, the story is all about ETH2. So today, we're going to be talking about this analyst report. It's called ETH 2.0, the next evolution of the crypto economy, written by the folks at Messari Crypto. We'll introduce them in just a moment. But I think for me, David, this was like the first analyst report that I've read where I'm like thumbs up on the whole thing. I mean, most analyst reports about Ethereum that have come out over the years have been like garbage, like really
wrong, bad,
wrong, like bad take.
Yep.
Doesn't make sense.
Yeah.
This one nailed it for me. I don't know. What's your take?
Yeah, and this one nailed it, not just on like the technical details, because like even that is to generating a report on the technical details is a monumentous task in of itself. Not only because like understanding Ethereum 2.0 and the different phases to how to get there is like that's a hard ask, but also it always changes at the same time. And so Messari's done a really good job of producing a report that actually like keeps up with all the changes. And in addition to that, there's also just conversations of like the social contract and the political philosophy, and kind of got pretty meta with about the philosophy of Ethereum and just the ethos of Ethereum, which I really, really enjoyed. And it's integral to understand what that is to understand Ethereum. And they did a really good job with that.
Yeah, we are going to dig into it. Also, a few things that are new. Of course, our ETH2 live stream that we're just talking about, David, that happened at 3:30 your time this morning. That is now archived on our YouTube. But a lot of folks tuned in for these live streams. So we had a live stream on Bankless. ETH Hub had a live stream as well. There's the Reddit ETH staking community. I don't know, it felt like between all of those live streams, there were like 6,000.
Yeah.
Plus attendees, participants who witnessed the launch of ETH2 Genesis live.
Yeah, that is the largest single event, at least Ethereum event, based on viewership that I've ever seen. Like I've never seen like 5,000 or 6,000 people all like watching the same thing. And that was just the people that were watching on YouTube, right? Like other people were watching it from like just watching their own nodes at home, right? And so like as far as events go with Ethereum, biggest event ever.
Dude, it was super cool as well. So that is archived. If you guys want to check it out, we'll put it in the show notes. Also, our Balaji podcast came out on Monday. Man, that was hot. Dude, I remember recording that, and I was doing it like, it was like between 12 and 1 o'clock in the morning, my time. Yeah. And we just kept going because the conversation was so inspiring and so interesting. What was your big takeaway from that?
Yeah, recording that was a ton of fun. We actually had to record with Balaji twice because like we recorded about an hour and a half, except we still had so much left to go, and he had a meeting to get to, and so he went to the meeting and then he came back and we recorded to finish it off. And I think I got this line from you, Ryan, so I'll steal it. Back in 2010, it was crazy to like consider Bitcoin as like a new money, right? And so like even if you believed it, like speaking about it to your friends was like harebrained. It's a harebrained idea. And so like, but now Bitcoin's money. Now Bitcoin is just like understood by the world. So what's the crazy harebrained thing in 2020? And Balaji has an answer to that question. It is, let's make a country. Let's make a nation. First, let's make a nation in the cloud, and then let's figure out how to make it real in real life. And so we had a 2.5 hour like epic conversation with Balaji about like, how are we going to go from just like a group of people who are interested in this project to like actual real land somewhere building a real country. So I think that's like the new crazy topic of the decade that I think maybe in 1 decade from now, this will be a normal conversation.
That's the teaser. And Balaji brings a lot of credibility to it because he tends to see these things about 10 years in advance. It's like he's from the future. Also, David, speaking about the future, tomorrow you've got a Messari event. Are you guys going to be talking about this report as well, or what's that event about?
Yeah, I think we'll talk about this when the boys come on in a sec. But I think the gist is like there's just so many different things that are new with Ethereum 2.0, and so Messari is throwing this event tomorrow, which I'm speaking at with Cami Russo and. I'm forgetting her name. Oh no, who wrote the with Colin Mara Schmidt.
Yes, Mara, absolutely. She's fantastic.
On Messari,
she wrote the Ether Bonds paper.
Yes, right. Yeah, and so that's just going to be a really fantastic conversation. Like, kind of trying to get a grasp on like how does new economics work in Ethereum 2.0. Really important conversation.
Awesome, man. Okay, going to introduce the guests in just a moment, but first I've got to ask you the question we always start with, David. What is the state of the nation right now?
The state of the nation is launched. Past tense. Because it already happened. It happened this morning. We are launched, right? So Ethereum 2, it's launched. Like there's no double meaning here. This isn't that creative. The state of the nation is launched.
And that is pretty exciting in and of itself, right? A lot of these sorts of things fail on launch. We've actually seen a number of, like one of the major test nets, just kind of the rocket died on the launch pad and tipped over and exploded, right? But this time, for mainnet, the rocket took off. It cleared the atmosphere.
When it mattered.
We're on our way to the moon, I guess,
That's
somewhere.
Yeah,
destination unknown. We'll call it the moon. All right, awesome. State of the Nation has launched. Now we want to bring on our guests to talk about this epic report. How many pages is this? We're gonna have to ask the guys when they come on.
I think. Yeah.
70-page report. All of it is gold. We'll dive right into it. We want to introduce our guests. Ryan Watkins, because there's 2 Ryan on the podcast, we're gonna call him just Watkins. He's okay with that. And also Wilson Withiam. These are the brains, the analysts behind this epic Ethereum report. Gentlemen, are you with us? How are you doing today?
Hey, what's going on, guys?
Hey.
Doing well.
Hey, Wilson.
Hey, guys.
Welcome.
Yeah. Excited to be here.
It is great to have you. Awesome. Well, we're going to dig into it. So first, we just want to say, like, nice job on the report. If you didn't hear our intro, we're big fans. Like, you did a fantastic job. I'm just curious, how long did this take you to put together? Was this something that was like months in progress, or did you finish it on the weekend before?
Yeah, well, we definitely finished it the weekend before.
Okay.
But yeah, we've been working on this for probably about 2 months now. I guess originally we were working towards the kind of like November 16th-ish launch date for the Beacon chain. But then, once that got pushed back, actually, lucky enough gave us some time to put in a little bit onto the report, and end up taking about 2 months. So, by far the most research I've done on anything in crypto. Just a ton of fun.
So when you guys, sorry, Wilson, go ahead.
It was perfect timing for the BLSD audit to come in last minute to just give us that little extra time so we could bump it up from like a 30-page report to.
All right. So what Wilson's referring to here is he got an extension on his paper, basically, because ETH2 was delayed a little bit in November. Some people thought it would come Thanksgiving weekend. And there was a kind of an audit that was sort of pending for some BLS crypto signatures. So you guys got a reprieve in a few more weeks to finish it up, right?
Yeah, exactly.
So when you guys first started chewing on like producing this report, what were some of the initial like motivations? Like why, apart from just like making information available as like part of Messari's business model, like what really specifically about an ETH2 report was really attractive for you guys in Messari?
Yeah, so I guess I'll start first. I think what we really want to do with this report was, we looked out on what has been written on ETH 2.0 so far. We've seen really great technical deep dives. We've seen really great economic deep dives, but we really wanted to create a report that combined all of these different elements, as well as touched on some of the more like philosophical and historical elements of Ethereum 2.0 that we think are like critical to understanding what is actually being built, why it's being built, and where Ethereum is going. And to put that all in one report is really what we're looking to do.
Yeah, that it was exactly what Watkins was saying. Trying to put something together that really kind of took away. There were a lot of misconceptions going into what ETH 2.0 can be. It's this major upgrade, really trying to break it down into a very simple but descriptive report as far as what's going on, so people have a good idea of what is happening now and what's to come and what are the implications for it. So really covering all of our bases in a very easy to read and digest manner.
So we're going to open up the report and talk about some graphics and components of it that we thought were particularly interesting. But before we do that, I want to ask about the decisions to include like political philosophy and like social consensus and a social contract in a report, right? Because this is not something that you will ever find in a legacy report about a legacy equity market, a company or whatever. Like there's no political philosophy of like Tesla or Amazon, right? And so this is something that I think, legacy people or institutions, quote unquote, people that are trying to like peer in from the space from the outside in, they might open up this report and be like, why is there political philosophy here? So maybe like you guys could add some perspective as to why you thought it was important to add in like some of the social aspects or social narratives around these blockchains.
Yeah, no, it's funny because Wilson and I were like literally just talking about this yesterday about the differences between writing a report, say at an investment bank, and it's pretty much just very descriptive, very dry to the point, what are the numbers, et cetera. And you don't really need to dive that deep into what is the political philosophy of Jeff Bezos to understand Amazon. But with blockchains, it really is a different story, because blockchains aren't just technology, they also are institutions. And they're institutions that are encoded with different values and were created for different purposes. And we thought that it was really important with this report, if you really wanted to appreciate what Ethereum is and kind of the underlying design principles for Ethereum 2.0, it's really important to understand these philosophical components, right? To understand. And I think another thing that was also pretty interesting is that with Bitcoin, there's been a ton of content written on what is Bitcoin's social contract, what are Bitcoin's values, and these ideas have actually seeped into mainstream consciousness as well. When you hear about Michael Saylor or any of the major Bitcoin bulls, including some institutional investors, they will touch on some of the core elements of Bitcoin social contract, like the 21 million, it being immutable, censorship resistant, decentralized, all these different things. But for whatever reason with Ethereum, there's this perception, because it keeps changing its narrative and because it's always evolving, that its social contract is kind of nebulous, or it's just weak. And that's not necessarily true. There are very consistent values that Ethereum has had and continues to have, that the community agrees upon, and that kind of keep the Ethereum ecosystem together. So I thought it was really important to start, upfront, really right after introduction, with what is Ethereum actually, and why, what are we all doing here?
Wilson, do you want to add anything?
I mean, that it broke it down perfectly. I think really trying to get to understand what Ethereum is, you have to understand, where it kind of comes from and what are its key principles. And so that's why we kind of lined it up right there. Not only the philosophy going into why it was built, but then the principles of what Ethereum 2.0 is supposed to bring. And it goes into its design, why it took so long to come, why it took 7 years of research to get to where it is. Because they didn't want to sacrifice decentralization for all these different upgrades that they're looking to make. And that was core to its design, to its social contract going forward. So really kind of understanding that concept was key to diving into the rest of the report.
Fantastic.
Yeah, and I think one thing I'll also add is that these concepts of Ethereum social contract, it's not just some kind of ideological appeal to people. These ideas actually underpin many of the desirable properties about blockchains, making it so that they are globally accessible, making it so that they are unable to be censored. Pretty much everything that makes a blockchain interesting is enabled by the fact that you have these core ideas that actually become real when they're manifested in the design of a blockchain. So it's not necessarily just trying to tell everyone why what we believe in this industry, but to actually get them to understand why this stuff is important in the first place.
So I would imagine that the research process, because of this difference, the research process for producing this report was probably also different. I don't know what your guys' backgrounds are with producing reports of this nature, but I would imagine if you did have experience that this particular report was perhaps different than reports you've produced in the past, specifically based off of this attempt to talk about the political philosophy and the ethos of a blockchain. So maybe talk about just the research process at large, and also maybe any of the differences as a result of this unique nature of what Ethereum is, and how that impacted the way you guys came to coalesce the report.
Yeah, so I think a lot of the research, it's been years in the making, especially on the more philosophical and historical aspects of Ethereum and Ethereum 2.0. And that's, years of reading some of the content that you guys put out, reading all of Vitalik's blog posts, reading or watching all the interviews that Vitalik and various members of the Ethereum Foundation have given to really get a sense of how are they thinking about Ethereum 2.0. So in that respect, like it was a unique. I mean, it is similar because you're just finding information and synthesizing and putting it to a report. But I guess like another thing is that you also have to understand some of these ideas, like what is a social contract in the first place, for example. So we actually had to do some research on, okay, well, what is a social contract and how do we actually express this idea in report that may actually be like palatable to people who just come to this space and just think this is just a technology. Like, I've never heard of this concept of a social contract, and especially applied to Ethereum. It seems crazy. So yeah, those are kind of the differences.
Yeah, it was it's kind of interesting because I was drawing a little bit more on like experience, because when I first I guess I'm relatively new. I really got into crypto back in 2017, so typical bull run bandwagon fan.
Oh, I'm right there with you, brother. September 2017.
Yes, exactly. Yeah, so yeah, same time. So when I first came in, I was particularly drawn to Ethereum, and so that's kind of where I went. I started helping teach classes of how people how to develop smart contracts, and so it was kind of like this this ecosystem of like a acceptance and and it was kind of like a pragmatic approach to everything, which is what I found very, very interesting going in. So kind of drawing on that and that kind of culture around what Ethereum was. And then the other part was really diving into not only a lot of the historical pieces that Vitalik put together 6-7 years ago, but listening to a lot of the podcasts to try and get a deep understanding of what it was kind of like going through this process. And so in some cases, I was diving deep into Reddit threads of stuff that was happening like back in like 2014, 2015, and seeing kind of like how were they saying, how were they acting, what was the community like at that time, and how it evolved over time, which it was fascinating to kind of dive into the history of how everything has evolved over time, both Ethereum as we know it now and ETH2 and where it's going to go from there.
I think what you're saying, Wilson, is super interesting because this is not how a traditional institutional investor would go collect data, right? They are not going to go to the Reddit threads or the old Vitalik posts or the Discord channels or Twitter. Heck, we have some probably institutional investor exposure at Bankless on like Substack and YouTube, but it's not necessarily their channel either. Like, we don't package it in a way that institutional investors, like David and I, don't wear suits generally, right? Like, so, but the way this is packaged it's very appealing to the institutional investor, I suppose, or the traditional investor who is used to reading like analytic heavy data driven sorts of reports like these on other traditional assets. I want to ask a question about who this report is for. Is that kind of who it's for? It's obviously for the crypto community and anyone who is investing in crypto, right? They're going to read this report. Everyone who is reading Bankless should go read this report, obviously. But also outside of that, are you guys trying to reach a new audience, an audience that maybe like Paul Tudor Jones of the world, they understand the Bitcoin narrative, and now they understand digital scarcity, but they don't yet understand Ethereum? That was my guess on who you're trying to reach after reading this, but why don't you tell us who's the target market for this kind of a report?
Yeah, so I think we wanted to create this so that it was accessible to kind of as many people as possible. So whether they be a user of Ethereum or an investor or someone who's building or a service provider in the space, we wanted to have insights that would be helpful for all these different groups to navigate the space. But yeah, I mean, definitely something that we definitely considered. Probably like one of the first things we considered was actually how do we like really communicate what's special about Ethereum to this more like institutional, like more professional audience that now is comfortable with Bitcoin, now understands the value proposition of Bitcoin, but has not yet been able to grasp Ethereum because of how kind of like expansive the idea of Ethereum is. And I think when like we're thinking about like how to like craft this report, one of the things like when people think about the smart contract market, and I'm sure like Wilson can elaborate on this, a lot more, is that, when people think about smart contract platforms, they think, one, they are like utility platforms, like they just, and it's all about how much transaction throughput it has. It's all about how scalable it is, like all this stuff that, like, yes, does matter, but is probably about like less than half of the picture of what actually matters with these blockchains. And to understand, why those things aren't everything, it really was important to really like touch on, kind of that first section on philosophy and history, to really like talk through the different design decisions that the Ethereum team made for Ethereum 2.0, to highlight like why that's important. So, hopefully it was written in a way that, someone with that more like professional background will be able to appreciate, with how it's written.
Yeah, and exactly what you're saying on the institutional side, people from outside of Ethereum trying to get familiar with it. But I think I had a little bit of something for everyone in a sense. So you can kind of get a sense of the history, of the philosophy behind it. But I had a lot of talk on the monetary policy of ETH that Watkins did a lot of phenomenal work on. So if you're looking from an investment standpoint, those are some key critical parts that you definitely want to check out to understand what's coming forward with Ethereum. So yeah, that was definitely one of the key things we talked about going in, is who is this going to be for? How are we going to really structure this and write it? Obviously, we want to make it very approachable, but at the same time, have something where people have some key takeaways that they can make decisions on going forward.
Very good. All right. Well, with all of that, I guess, set up, we want to get into some of the meat of the report. And I like what you were saying, Wilson, about sort of, not just talking about kind of the network side of things, but also talking about issuance and Ether as an asset, because I think a lot of people they have trouble separating the difference between Ethereum as a smart contract network and Ether as a reserve asset for that network, because in Bitcoin, it's a little bit one and the same. I mean, the purpose of Bitcoin is to transact Bitcoin and move Bitcoin around. So monetary policy is very tied into that. Anyway, we're going to get into all of that in the report. A few sections to cover. Can we start here though, which is the scalability trilemma? Maybe Watkins, you could kind of describe what that is and what ETH2 does about that.
Yeah, and also let Wilson hop in as well. But basically, the high-level idea with the scalability trilemma is that there exists this trade-off between these three properties of a public blockchain, being it can be decentralized, secure, and scalable, but can't be, or it can only be one, like two of the three. And different blockchains have made different trade-offs to get those desired properties. And it's been this, really tough problem to try and solve, especially for Ethereum, where it wants to become scalable, but doesn't want to sacrifice its security or decentralization. So one of the ways that Ethereum approached this problem is through sharding, which is one of the major components of Ethereum 2.0's design. And the high-level idea with sharding is that it involves partitioning the Ethereum blockchain into subsets of nodes, which can process transactions and store data kind of in parallel. And the reason why this is done is, and it's kind of like tying back to some of these underlying philosophical aspects of why this was built, because Ethereum wants to ensure that, yes, while it gets scalability, that it is still accessible for people to run infrastructure for Ethereum, so that someone with a laptop or some other kind of consumer hardware can participate in the consensus process and run an Ethereum validator is something that's very important to maintain the property that this thing is decentralized and accessible. And then probably another aspect about this kind of sharding component is that it also makes Ethereum accessible for users when it's more scalable. So, and I think this is actually a really important point, because if it's a case where transaction fees become extremely high in the future, because block space is very limited, then practically speaking, the way that the majority of people would interact with the Ethereum blockchain would be through intermediaries that subsidize the transaction cost for them. And if that's the case, then all of these special properties of the blockchain don't actually flow up to end users. And that's kind of like a compromise on the vision. So scaling is important, not just from the perspective of, kind of the supply side of people who run the infrastructure for Ethereum, but also the demand side, so that people can directly interact with the Ethereum blockchain and really take advantage of, all the special properties.
As we've said so often, the alternative to scaling the base layer in some way, or having a trustless scalability solution, is basically you have to scale by trusted intermediaries, as you're saying. So often crypto banks, right? Mm-hmm. We see Bitcoin doing a lot of this today, right? Transactions through Coinbase, more institutionalization. Hopefully that is not the path that Ethereum takes. But I noticed you kind of plotted these things in, I guess, different sides of the triangle here, right? And it looks like things that have strong decentralization with high security are sort of on the left, and they're more conducive to money type use cases. So Bitcoin and Ethereum would be those. Those that kind of make some trade-offs with decentralization in favor of getting more scalability, like EOS or a Tron or a Ripple. It seems like what you're saying in this graphic is they're not as conducive to non-sovereign money type use cases with bearer assets. Is that one of the ramifications of the scalability trilemma that you're drawing out here?
Yeah, I think that has to be a part of it. The main purpose is they're making the accessibility to the base layer, whether as a node operator, as a user, or mainly as a node operator, very, very difficult. They're limiting that. So when you have a limited number of node operators, obviously that's just a high amount of centralization that you have in the network. And as we've seen with some of the cartel issues with EOS and obviously Tron, there are some issues that can seriously bubble up there. So making that maximally democratic is going to be far more beneficial in the long term for any network. But it's tough to kind of meet that high level of security that something that Bitcoin and Ether have reached. And one of the main reasons behind why they're valued at where they're at is because they do have this high monetary premium right now, and they are kind of seen as these store value assets. At least it's, some people that most do. So yeah, I think that's kind of why Bitcoin either fell to one side and the others haven't, because they really haven't reached that point of how people kind of look at them as a store value asset.
Wilson, that sounds a little ETH is money of you, sir. Is that what you're saying?
A little bit.
So we see a bunch of blockchains around the perimeters of this triangle, and then we see ETH2 at the center, right? And I feel like the reason why we wanted to start with this particular graphic is because this kind of illustrates the difficulty of like moving into the center. Like this is called a trilemma for a reason. Jeff Coleman recently had a fantastic tweet thread that talked about like, why did ETH2 take so long? And the answer was, well, because it's hard. And like getting into that center point where you have a nice balance of security, decentralization, and scalability, where you are working all the angles to maximize all three of these rather than having to make compromises, is why Ethereum 2.0 has taken so long to get out the gate, right? And so it's at this point, excuse me, with Ethereum 2.0 well, probably speaking of Ethereum 2.0 past phase 1.5, when the ETH 1 and 2 chains merge, there is nothing like Ethereum like that, right? And Ethereum 2.0 is what it's not just trying to like have an evolution of Ethereum. To me, it's more like trying to, in the most pure and most essence way possible, solve the scalability trilemma, right? And as a result of that effort is what Ethereum 2.0 is, right? Ethereum 2.0 is the thing that solves the scalability trilemma, not some just inherent, it's technologically neutral, right? Like whatever technology needs to solve this scalability trilemma needs to be discovered. And that's what Ethereum 2.0 has morphed itself into, right? Out of a very long, like 6-year long research and development process. So I'm super happy to see this graphic like really early in the article, because it really sets the foundation of the whole purpose of the whole point of this whole Ethereum thing, and also sets the groundwork for the rest of the article, right? Rest of the report.
Yeah, and I think you nailed it when you were talking about the it was Jeff Coleman,
Yep.
the tweet thread. That was an excellent tweet thread. That was fantastic, diving into why it took so long, and the background on BLS signatures. So the idea that, and this is kind of why we put Ethereum 2.0 in the middle here, is that there are other networks that have introduced proof of stake and sharding, but no one's done it at the level that Ethereum 2.0 is looking to do it at. Mm-hmm. No one's going to have the level of validators that are on the network. And so that level, it kind of takes it to another level of like, hey, we're introducing the scalability feature. And then at the same time, you're going to be significantly more decentralized than any other competitor at the moment. Who knows where they end up at, but just based on design, that's where it's leading to. And just kind of one of the reasons why, going back to that thread, was the idea behind the BLS cryptographic signature aggregation. So basically, if you have a ton of validators in a network and you're pummeling the network with a bunch of signatures on each block, it can lead to a network overload. And so what BLS does is it basically aggregates the signatures and makes it very, very small, so you can maintain the speed of block finality without making node operator costs go through the roof.
Awesome. Any ready to move on?
Yeah.
Cool.
Let's talk about this graph, David.
Yeah, so this is the one, the subject we want to bring up next, because again, this actually sets up really important groundwork for why all of this effort needs to be undertaken in the first place, right? And when I first look at this chart, and this is a chart of the percentage of Ethereum block space that's used, right? Like how full are the blocks on percentage terms? And we see like relatively in the center, we have like the 2017 like mania, right? This is where we experienced like ICOs that sold out in 10 seconds because everyone was racing to get in the blocks. This is when we had CryptoKitties. This was like the first real test of Ethereum's capacity, right? And like we see, to me, when I look at this shaded area in the center, I see 3 big spikes, one in like Q1, 2017, one in Q2, and then maybe one in like late Q4, 2017. And it's that in each spike, it's progressively higher and higher and higher, right? Like the first spike spikes up to roughly 70% full. Then like the second spike is 85-ish, 90% full. And then the third spike in 2017 actually got to comparable levels that we see in DeFi summer 2020, like plus 95% full, which if you're above 95% of a block, you're basically full. That's basically a full block. And what's interesting to me is like, okay, that's great. We reached capacity, but that was in like peak mania times. But we actually didn't really fall off in block usage between 2017 and 2020. It stayed relatively high. And then the first instance of like DeFi coming back to life after the bear market of 2018, it looks like we have just this incredibly high sustained block percentage used in 2020. Like it starts at the very start of DeFi summer 2020, it's like 95%. And at the end, it looks like it's something like 98% full. And so to me, this is just like extremely validating of the whole incentive or need to scale Ethereum, right? Like we're trying to scale Ethereum, and this is why we're doing it. Like the first instance of Ethereum becoming like adopted again, we max it out. It's like it's already maxed out, and like this is before like new wakes of people come into the space. That's my analysis. What's your guys' take when you see this chart?
Yeah, so I'll just give a couple of thoughts, and then I'll bounce it off to Wilson. But yeah, I think you nailed it. Like the reason why Ethereum is not doing this upgrade because they just want to make things complicated. Like that's not what they're doing. Like the reason why there's this transition to Ethereum 2.0 is because like Ethereum doesn't currently scale today. And it's cool that we can run all these very interesting experiments on here, and everything that's happened, even during the ICO boom, but especially now with DeFi, it's incredible what's been built on here. But what we're doing now is still very small scale and nowhere near what, the level of scalability we need if we actually want Ethereum to actually serve as a public infrastructure for the world, where you can actually run significant amounts of the world economy on Ethereum and actually start have like real people actually use this thing. So yeah, this is why Ethereum 2.0 was built.
Yeah, I won't add too much. I'll say on top of that, I kind of wrote it in the piece, but I thought this was clear affirmation of some of the concerns that a lot of the developers and researchers, when they first built Ethereum, they had those concerns around Ethereum couldn't scale should it reach this level of utility. But it also affirmed a lot of the research that they had already been doing and research that they had put towards building Ethereum 2.0. So that was a clear reason. And this whole event starting in 2017, and you can see it hasn't gone down since, is the clear showing that there is a need for scalability, and that it's a top priority.
I have two thoughts on this when I see this, which is super interesting. But it's a little bit of a side quest. One thought when I see this is, oh my God, like in 2017, we wasted block space on all sorts of stupid things. There's this concept we talk about on Bankless, like economic density of blocks, the transactions, like the more economic value and throughput being pushed in each block. And this is something, by the way, that happens in Bitcoin, right, as well. Mm-hmm. But it also, when I look at this and I contrast it from 3 years ago, it also seems to be happening in Ethereum. Like in DeFi Casino Summer, we were spending blocks on more productive things. Like these are collateralized loans, a lot of still speculative behavior, but it wasn't CryptoKitties, right? And I wonder, like 3 years from now or 5 years from now, if the things we did in DeFi Summer are going to seem awfully silly too and awfully wasteful, because it seems to be the case that, at least on the main chain, these transactions are getting more and more economically dense. And you guys talked about rollups a little bit later on, and kind of that way of thinking about Ethereum. And that is a maximally economically dense transaction, because you're doing all of this economic activity in a rollup chain, and then essentially you're just like settling that on the main chain. So that's one thing I think of. Any reaction to that? Was that an observation that you made as well?
I mean, yeah, absolutely. I mean, I'm just kind of even thinking about it a little bit more right now, and you'll see a lot of these. And this is just how I'm thinking of is each cycle that we go through in 2017 and what we went through in DeFi Casino Summer is we're going to go through these cycles of where things start to get somewhat popular, and then they'll catch on. And you almost need to run through that. Yeah. You need to get to the other side, and then the ones that actually have some utility, some good teams behind them, as we're seeing right now with like YEARN is basically eating up all of DeFi. They're the ones that are going to come out and be a potential front runner. Or all I mean is that they'll still be there come the next cycle of whatever comes next. And I think it's going to be related to DeFi, but what that's going to be, maybe it's not liquidity mining food coins, but it's something even more interesting related to. It's
very survival of the fittest, isn't it? In a healthy evolutionary way, and only the most valuable transactions survive, because those are the only ones that can compete for block space, which is super interesting. Want to move on to this maybe, because this is sort of related, I guess, to block space, but the median Ethereum daily fees have certainly shot up as well. And that means, like I was looking the other day at Token Terminal, and basically ETH fees annualized are about 700 million right now, right? So if you look at kind of all of the fees that are going to pay for block space, Ethereum is generating 700 million in revenue, which is pretty surprising because that was not the case in 2017. What's the story behind the Ethereum daily fees? Are blocks just becoming more valuable, or like what does this tell us? Is this also part of the story of, oh my God, we need scalability on the base layer too?
Yeah, definitely part of the same story, except I guess maybe this chart highlights the perspective of the user of Ethereum and what they experience if they're trying to submit a transaction. So throughout this year, like you kind of see like the median daily fees like paid on Ethereum is in ETH terms is about 2,000 ETH. And then since kind of like the DeFi summer, which I'll say started in June, it was around like 5,000 ETH per day, which is a ton. I mean, and when we'll talk about this kind of in the section we get to Ethereum 2.0's monetary policy and what happens when you start burning some of those transaction fees and why that matters. But yeah, it just really highlights just how much more competition there was to get your transactions included into blocks because there was just so much opportunity on Ethereum this summer for people. I mean, to be frank, just for people to make money. Yeah.
Yeah, and the criticism is real, right? At sort of the peak in October, lots of folks in DeFi were saying, this is just a whale chain, right? Like we can't afford a basic transaction. Only if you only have a certain amount of capital, maybe you can, but it's not worth it for my $500 transaction to actually pay $100 in gas fees to do this thing. Well, let's switch to issuance because I think that is another key part of the story. So we were talking about
all the same story.
Blocks.
The flow,
it's all the same story.
Perfect.
So we're talking about blocks and that being kind of the chief commodity that Ethereum sells, I guess, right? Is get your blocks in an Ethereum transaction. We're selling that to you, and you have to pay an ETH, by the way. But this is a story around Ether as an asset and its net annual issuance, right? And we'll get into why that matters. Maybe kind of the 3 points on the triangle. We call it the triple point asset thesis. But can you talk about this? Because I'm not sure that many people, frankly, know this, guys, right? Like, I don't know how many times a week I get asked on Twitter, what is ETH's issuance into the future, right? I'm like, well, like, we kind of know it, right? Like, I can't tell you there's a fixed amount of Ether, but we kind of know it. Can you tell us what we know and how we know and what this graph is showing us?
Yeah, so some helpful background for this is just to describe Ethereum's monetary policy, kind of what it is. And you guys have discussed this plenty of times, so it might be repetitive for you guys. But the high level idea with Ethereum's monetary policy, it can be defined as like minimum necessary issuance. And basically what that means is that Ethereum always aims to issue enough ETH to ensure that it remains secure now and into the future. Now, the trade-off with that is that, and this is probably many people's criticisms, is that who defines what minimum necessary issuance is? It's something that sounds very technocratic, subjective.
Sounds hand-wavy.
Yeah, and it's like really hard to really like quantify like what that actually is. But practically speaking, I mean, this has always been Ethereum's monetary policy. And what's happened in practice is that Ethereum's monetary policy has only changed twice in its history. And both adjustments were to reduce its monetary policy. So this is not something that, like, while yes, it may be a little bit kind of, like it's not like clearly defined. Practically speaking, if there was going to be a change to Ethereum's monetary policy, there would need to be ecosystem-wide agreement to do so. So this is not something that can just change at the flick of, if Vitalik just says one day, like, hey guys, like, let's jack up the inflation to 10%. Like this is it. Like that's just not how it's going to work. Now, I think that it's kind of important to highlight the differences here. So Ethereum has designed its monetary policy to prioritize security. And this is in opposition to Bitcoin, which has designed its monetary policy for kind of like monetary idealism, at least what the Austrian thinks is what would be like ideal money. And the trade-off with that, because we kind of discussed the trade-offs with the minimum necessary issuance, the trade-off with optimizing for this perfect money is that as a consequence, you also set your security budget arbitrarily. It's unclear if having halvings every 4 years and then ultimately a fixed supply where the Bitcoin blockchain will be supported by fees is actually viable in the long run. So that's the trade-off that Bitcoin makes. Now that we have that kind of framework for how to think about the monetary policy, well, this is how like it actually translates into Ethereum 2.0. So when phase 0 launches, well, I'm saying this as if it hasn't launched. I mean, now that phase 0 has launched, all of the issuance on Ethereum 2, the ETH2 beacon chain, will actually be incremental to what's on the ETH1 chain. So for the next, maybe call it 1 to 2 years before the ETH1 chain merges into ETH2, Ethereum's annual issuance will actually increase slightly. And it'll increase maybe about, so like here it is, it'll increase, probably somewhere between 0.10% and under the most aggressive assumptions, maybe 0.8%. This is a temporary thing, right? Like, because once that Ethereum 1 merges into Ethereum 2, well, all of that issuance that's coming from Ethereum 2.0 that right now is incremental will now become the only issuance for Ethereum 2.0. So if we go back to the last chart, that's kind of what it's showing, is that once this merger happens, Ethereum's annual issuance rate will drop well below 1%, potentially even below 0. Mm-hmm. And kind of like that range you see on the screen, that's depending on how much transaction fees are burned. So one of the things I touched on before is how when EIP 1559, which is kind of like a proposal to restructure how users bid for block space that results in majority transaction fees being burned, depending on how much transaction fees are being burned in E2, it can actually cause Ethereum's net issuance to actually be negative, despite the fact that Ethereum 2.0 is perpetually inflationary, which would be super interesting because at that point, I mean, you're talking about Ethereum's issuance rate effectively being 0, while Bitcoin's issuance rate is 1.8%. And I don't think this is something that many people have appreciated yet, just how, potentially deflationary Ethereum could be at this point.
One thing I just want to read this last line here because it's kind of encapsulates what you're saying. Is very likely that once ETH 1.0 merges with ETH 2, Ethereum will not only be the most secure blockchain, but also the one with the most credibly low monetary policy. That's the summary of what you just said.
Yeah, and I guess when I say credible, I really just mean credible in the sense that it is very likely that this is sustainable. Mm-hmm. So it's not going to be a question of down the line, like, is this issuance enough so that Ethereum remains secure? So that's kind of where that credible part comes from.
Ryan, you talked about how you gave the theoretical hypothetical example of like if somebody asks you like, well, what's Ethereum's like monetary policy? Like, tell me how much Ether there's going to be in 10 years. If somebody can answer that question with a specific number, the ability to do that comes as a sacrifice to the understanding, the knowing of the security at that point in time. It's kind of like that I don't know what law there is. It's something to do with quantum physics, but you can either know the velocity of a particle and not the place, or you can know the place of a particle but not the velocity, right? Like there's some like quantum physics rule about that. And so that's the same thing with blockchain security and monetary issuance. Is like either you get to supremely decide what the monetary issuance policy of a blockchain is, or you get to decide what the security of a blockchain is, but not both. Right? You only get to maximize for one of those two things. And the thing is, like with Ethereum, it decided to innovate and be pragmatic in its approach to generating security. And one of the big incentives to generating a very efficient and efficient in security blockchain is that allows you optionality with your monetary policy. And so like the innovation behind proof of stake means that we get to tinker with our monetary policy in ways that are long-term net positive for the ecosystem. So at the same time, we've been able to generate a secure environment for the Ethereum economy, while also we've been able to figure out a path forward for something that is actively deflationary versus something that is just passively passively deflationary. And that's what I see in like this chart here, where like the line is variable, but it's trending in the direction that you want it to, no matter what. And I want to go back to the line that Ryan just read out. Ryan, if you want to scroll down a little bit. To me, when I read that line, that felt like a mic drop moment. And because if you gave out this line 2 years ago, back in peak bear markets, when the Bitcoiner like maxi narrative was like dominating, and if you got like Ryan Selkis, like what do you think about this line? I'm sure people would be like no, that's just completely ridiculous. But the fact that this sentence is being like reported out in a report nowadays, to me, just indicates like how many people are starting to wake up to like this new alternative security model and the positive benefits of the monetary policy over the long term. And so I see this as just like a shifting of the tides, if you will, about like the perception of Ether from like the outside in. And I'm just really thankful that you guys are putting these words into a report, because they mean so much. When you guys typed, whoever typed this into this page, did you think about the implications of typing those words in when you type that?
Yeah, no, that definitely, we definitely did. And, I'm sure that there will be people that are triggered, and rightfully so, because this is something that will happen, or I should say, this is something that is planned to happen in, 1 to 2 years. And in theory, it's not guaranteed. So I can get why people will be skeptical if they read something like that, and they are, have a predisposition to be an Ethereum skeptic. But this is the plan. And if Ethereum 2 works out the way that it's been designed, this will happen. And at that point, people will need to deal with the consequences. And, granted, even at that point, maybe people still might not get it. Maybe they'll be like, Ethereum is still perpetually inflationary, and it will be hard to get people to buy the narrative. We still don't know, but this is something that will happen if ETH 2.0 works out, and it's important. It's integral to understanding how ETH will evolve as an asset in Ethereum 2.0 when it does, trying to kind of fully roll out.
I want to answer that question another way too, right? Because when someone asks you, what is the monetary policy of Ether? How much supply will there be, right? The answer, of course, is what we've said: minimum necessary issuance, right? It's this balance, this trade-off between we're going to maximize for security, but we also it's not like we don't know. Like, we know the bounds of what this is going to be. Like, it's not that hard, right? So maximum is 4.82%. Like, that's probably going to be the maximum, because we're not going to have likely more than 30 million staked ETH, and it'll probably fall somewhere in the 10 to 16K range. So we're probably talking about, before the merger, a 4.47 to 4.6% issuance rate, right? So that's the max, and we know it won't be more than that. And if this merger happens, which again, as you say, it's not concrete, nothing in the future is, who knows, right? But if the plan is carried forward, and by the way, we have evidence that the plan seems to be working because ETH2 just launched, okay? If that happens, if you haven't heard, in 2 years or so, which is what the timeline, what the timeline kind of predicts. Look, maybe you're bearish on that. Maybe it happens in 3 years. Maybe it happens, but there's a tremendous amount of momentum and force from the community to deliver on this plan. And we just completed the hardest part. If that happens, then we get a drop of issuance down below the 1% range. And do we know whether that's going to be 1% or negative 0.5%? No. But to me, both of those scenarios are pretty damn deflationary. Like, that's a pretty good store of value asset. It's a pretty good story. So I am fired up, because I'm also tired of people saying, acting like Vitalik could trigger a masternode and suddenly inflate 15% annual issuance into his personal account and steal it like a Fed chairman or something, because that's just not true. But I want to ask you a question here, because I'm getting to a question. This is not just a rant. Why is this so taboo? So David and I have been talking about this, you guys know, right? For the last year and a half to 2 years, right? It's why we started Bankless, literally, to talk about this stuff because no one else was. And here's the first report I've seen that is actually like spreading the truth about what is about to happen for Ethereum, right? And you guys are doing it, and fantastic. Thank you. Like sincerely, thank you. But why has it been so taboo to do this? Is it the fact that it's taboo, or maybe it's something else? Maybe it's just the data is hard to compile. What's your sense as analysts as to why no one else has written a report like this?
Yeah, I mean, there's probably a ton of different things going on for why people always discount this scenario that could happen. I think among them is that many of the early people who got involved in Bitcoin were playing for a very specific thing when they thought about what a cryptocurrency would be. And they're playing for a fixed supply currency with a deterministic monetary policy. And when that's what you're playing for, and when that's what you don't want to compromise on, when someone offers an alternative, oftentimes I feel like people can think in binaries, that it's either fixed or it's hyperinflationary, and Ethereum's going to be, Zimbabwe on the blockchain, and that's just not this is not true. So I think that was probably one of the biggest things, is just that some people just don't want to, and also I think another thing is that for whatever reason there's this idea that there will only be one crypto asset that will succeed, and that there's not a future where these different blockchains, Ethereum and Bitcoin, can actually be symbiotic and they can both be successful, that it's not a zero-sum game. And I think that like thinking is probably one of the reasons why so many people haven't been able to appreciate this. And hopefully that will change, especially when this ETH1 merger finally happens, and this thing is real, and it's no longer a point of contention or a what if. It's just this exists.
Yeah, I think, yeah, you on that last point, I couldn't agree more. It was the idea that that there will only be one winner take all situation, and especially when you have a lot of Bitcoin holders or people that have been in crypto for a while, as soon as you tie any sort of financial holdings to this narrative, that's going to just kind of bring out this ideology that's not going to allow someone to kind of think of something else as money. And I think that was the other thing that kind of maybe attributed to why it was potentially taboo, is the idea that using ETH as money. That narrative was, I guess, kind of brought up more kind of got legs within the last 2 years. Mm-hmm. So kind of looking at it when you're thinking about issuance schedules, you really kind of do that for assets that you're looking at it from a monetary standpoint, and less so for something that might be just used as a utility or gas. So actually starting to look at Ethereum from a different perspective, I think that's exactly something as it starts to gain more acceptance, then you'll start to maybe see more people look at it. So I think that was kind of one of the reasons why we definitely wanted to take that perspective, as we were saying, get everything into this report so everyone understands what's really going on.
All right, ready to move forward? Let's move forward.
I do have one solution if you're a Bitcoiner, is you could just buy some ETH, right? You could diversify a little bit,
hedge,
right? So I think having some investment in the space does color views on the space, and it's okay to be hedged. I guess if we're moving on, maybe could we talk about this concept of the staking implications on ETH, because that is the thing that launched today, right? Mm-hmm. And we've used this term Ether as an internet bond, and it looks like you guys agree with that as well. Can you comment on this kind of sovereign bond analogy and what that means for Ether as an asset, what that turns Ether into?
Yeah, and I'm sure this will probably end up leading into the Ether triple point asset.
Oh, we're getting there.
We're building.
Yeah, but yeah, I think so. guys actually touched on this earlier, that Mara and Colin did this great report called like Ethereum, the internet bond. And it was a really interesting report because, when you think about like what staking is, it's not entirely clear that there is a very easy analogy to what is happening here. So there are aspects of it that are similar to like a sovereign bond, in the sense that, if you think, and this is like a very simplistic model, but if you think, why does the United States raise capital via selling treasuries? Well, in large part, its largest expense is to pay for its defense. And there's kind of a similar concept here with Ethereum. It's like, what is Ethereum doing? It's raising capital from people who will ETH, and it's using that capital to then go and to secure itself. And another common thread between a nation state issuing a sovereign bond and Ethereum paying people staking is that the currency that it's paying kind of like these bond holders is one that actually issues itself. So Ethereum is issuing users ETH for staking on the Ethereum protocol. And that's interesting because of what it means for the risk you take when you're staking. So like the risks you take when you're staking are really two risks. It's one, systemic risk, and that's just the idea of like Ethereum failing. And then two would be validator risk. So the risk that your validator underperforms and you get penalized, or let's say you behave maliciously and you get splashed. Now, validator risk can actually be diversified away if you were to stake through like a decentralized staking protocol, like say like Rocket Pool, in which case you're just holding this kind of like ETH bond that is paying you ETH for providing the service to Ethereum blockchain. Now, it's not quite just like a sovereign bond, because there's also these other interesting components of it, right? Like there's no maturity on it. Users can demand their money back whenever they want, obviously subject to like withdrawal period. It's perpetual. And you also get paid transaction fees as well. So yes, like when EIP 1559 is implemented, the majority of transaction fees will be burned, but there will be a portion of it that is actually not burned. And that portion of it that's not burned will be based on Ethereum's ability to kind of serve users well in their use cases. And this is almost like an equity component to it as well, because it's kind of like this like variable component of how much return that a staker can get that's based off the utility of the Ethereum blockchain. So it kind of is this like really kind of new like financial opportunity for investors to be able to basically like lend your ETH to the Ethereum blockchain and receive this return from this non-sovereign, but in a sense sovereign, because Ethereum is like the sovereign over like Ethereum users, source of yield providing the service. So yeah, I think it's like a super interesting like opportunity for people.
By the way, Watkins, I'm not sure that people know about that last part, right? So we've talked a lot about EIP 1559 and the burn, right? Mm-hmm. So if there's a transaction, some portion is burnt, and that benefits all ETH holders because it reduces supply, of course. But if you're staking, if you're a validator, you also receive some proceeds denominated in ETH from that transaction too, in addition to the block rewards that you receive. Yeah. That's a really interesting point.
Exactly.
Wilson, do you want to add anything onto that?
I think I couldn't have covered it better. But I think it's important to kind of fit these kind of narratives around what's actually happening here, because it just makes it that much more acceptable what's going on. Because even there's still some people who are skeptical of what proof of stake can actually provide, and being able to kind of bring a story around it and make it relatable just makes it that much easier to understand what's actually going on.
Do you guys think that this is a narrative that the legacy markets, the legacy institutions, this headless thing that everyone keeps on pointing to, do you think this is a narrative that people can grasp onto these days?
This is to be determined. I feel like part of that would be predicated on acceptance of ETH as a monetary store of value. And then I think once you get over that hurdle, this becomes an incremental benefit to being able to hold ETH, and that you can be productive with it by staking.
Cool. All right.
Totally agree. Should we get to it, David?
We're
I know
here.
you're itching to get to
We're
it.
here.
We're here? Are we here?
We're
Is this
here.
the moment?
Uh-huh.
Okay, this is the moment.
So asset superclass triangle. And when I see this, I see Ether, the triple point asset, right? And so I kind of want to ask you guys like your thought process as to why you thought that the Ether, the triple point asset thesis was worthy of getting included into this report.
Yeah, so I think this was actually a recent tweet that Vitalik had where he was like, when describing like assets, now I might be like botching what he was saying, but the general idea is that like when describing things in the blockchain world, like assets, it's better to describe their properties than to just like kind of box them into like what they are. And with Ethereum, there's always been this, and this is something I struggle with as well, is like, what actually is this thing? Like, is it just a commodity because it's used as fuel for transactions? I mean, there's also the analogy back in 2017 that Ethereum was just kind of digital oil, and that's not really the entire story. It's not quite just oil. And then is it a store of value? Well, I mean, that's something that you guys always talk about, but that's also the full story, because it's not just something that people use for collateral and DeFi and to pay for transactions, et cetera. And then with staking, well, now you can actually get like a yield on your Ether. So now you have these like three like properties of asset. And maybe I should also zoom out and just describe what these properties mean and kind of where they come from. So I think like back in 2017, Chris Berdisky and Adam White wrote this paper called "Ring the Bell on a New Asset Class," where they looked at Bitcoin, and then they kind of introduced research from, I guess, a guy named Robert Greer about classes of different assets. And the student basically said that there's three super classes of assets: stores of value, which are assets that retain their purchasing power into the future. There are commodities, which are assets that can be consumed or transformed, and there are capital assets, which can be they're capital assets that can like generate an income, right? Now, with Ethereum, it is, I mean, and granted, I have not looked through every asset in history to determine if the statement I'm going to say is true, but it could be like the first asset that actually has all three of these properties. So if you look on this kind of visualization, we've had assets that have been two. So we've had gold and Bitcoin, which are both commodities and stores of value. We've had US Treasury securities, which are both capital assets and stores of value, right? Like people will gladly, I mean, there's like $17 trillion of negative yielding debt that people are holding. They're not holding it because of yield, they're holding it because to store value, right? But Ethereum is actually probably one of the only assets that actually has all three of these properties. And, I think it's just good to highlight these properties because they, not to try and like box Ethereum to like this, like this one thing, like, oh, like Ethereum is money, or Ethereum is commodity, or Ethereum is this, just saying like it just has these properties. And these properties are, could be different sources of demand for ETH on the Ethereum blockchain. Like ETH will be demanded as a store of value. ETH will be demanded to pay for block space. ETH will be demanded to stake. And this, I think, is actually what's important for people to understand from an investment standpoint about Ethereum. It's not some abstract concept of like, oh, like it's money, or oh, it's a commodity, or it's a capital asset. It's like, no, that there's three kind of different use cases that are all pulling upon it to be used, and that's an important driver of value.
Do you guys think that when somebody from the outside world, maybe a money manager, family office, quote unquote institution, when they stumble on this page of this report, do you think they're ready for some sort of interpretation like this? Because this is like not something that is within the legacy topics. Like this is a inherently crypto-based narrative or topic. So when the outsider perspective comes in and sees this, what do you guys think their gut take is going to be?
Well, hopefully I'd want to fix a typo under capital asset. but but yeah, I mean, hopefully this can help people understand, just help them to begin to understand what drives Ether's value. Because it really is difficult. Like, people would love to have these assets just fit into predefined boxes. But that's just not the case. Like, you really can't just box in what Ether is. And I think that's fine, because part of what makes this industry interesting is that in many cases, we are reinventing what like money is. And we're like creating these like new assets that haven't before existed. So I think it's fine that you can't box it in, and that it has these various properties that we may not be able to make sense of now, but certainly are important in driving value for Ether. So hopefully that, that idea can get across in this page of, sure, you might not be able to, it doesn't neatly fit into some box that you have in your head, but here's what makes it valuable.
So what David and I have found through our travels is this is the simplest way to explain Ether as an asset. This idea of an asset superclass triangle, this idea of the triple point asset thesis. We need to take this to the world, guys. What's the next step here? How do we get people to understand it? There's an element of, I feel like we're Bitcoin, like Ether is Bitcoin in 2015, where some niche group understands it, but like institutions didn't understand digital gold back then. They thought it was like, hacker money or drug money or something like that, right? So I feel like we need to take this out to more people and spread the message. I know that's what you're doing with your report here, but man, we're aligned. Let's do this, guys.
Well, this is the collateral we need to get that done. So this is why we're so excited to see this.
I do have one, thought on this. So as I've thought about the triple point asset thesis in these three ways, one like next level thing. So first of all, this is the way to explain it exactly as you had, in my opinion, Watkins. You did a great job. One subtlety I've often wondered is, well, actually, like the commodity here is not actually Ether, the asset. The commodity is actually Ethereum block space, which is different. We were talking about that block space earlier. But Ether, the asset, is almost like the petrodollar, because that's what, like as barrels of oil are all denominated in US dollars in kind of the real world. That is the unit of account for barrels of oil worldwide, US dollars as the reserve currency, as the petrodollar, if you will. Ether is kind of the reserve currency for the commodity, which is Ethereum block space, right? So like the next level of thinking about this, I think, is understanding that subtlety. We don't have to get investors there yet, but that's what I've come to think of it as. It's like Ether is actually just the unit of account for that commodity, which is Ethereum block space. I don't know if you guys agree with that. I brought that up with Chris Berninski when we had him on the podcast. And he was like, I'll have to think about that some more.
Yeah.
What are your thoughts on that?
I remember when you tweeted that out, and the kind of idea that Ether was gas money. It's just kind of like an easy way to think about it. You go fill up your tank and you're just paying with your credit card, whatever cash. And that's essentially the Ether in that transaction. So it's a very interesting way to think about it, because I think kind of wrapping a head around the asset superclass thesis, it makes it sound really nice when Ether acts as that commodity as well.
It does. I don't want to plug your ears, institutional investors. Let's go with the asset superclass. Don't worry. We'll address the rest in 2025 when you're ready.
Yeah. Well, it is important to know that like when you purchase block space with Ether, you're actually there's an intermediary currency that is gas. And so it actually goes Ether, gas, block space. And when you are like calculating the way for the gas price or whatever, like you are actually doing a very quick, instantaneous creation and then destruction of this gas currency, which then purchases you the block space, right? And so like this conversation actually gets really, really nuanced.
Yeah, no, honestly, I totally agree with that. And honestly, I think that the commodity analogy will be even stronger when EIP 1559 is implemented.
Yeah.
And there's actually this direct relationship between block space being used and Ethereum, Ether, the currency, being like consumed.
Gasoline wouldn't be as expensive if it was renewable. That is for sure.
Absolutely. I think we have maybe one last area we wanted to cover really quickly. And this is in the report to do with decentralized staking, right? So staking is now upon us. And you guys have characterized, I thought this was pretty unique, decentralized staking protocols almost as investment banks. Can you talk about what these decentralized staking pools could actually become in the future and how you think about them?
Yeah, so there was a really good article and then paper that Alex Evans from Placeholder and Tarun from Gauntlet wrote about this topic of what proof of stake and DeFi can learn from mortgage-backed securities, and they kind of introduced this concept that staking derivatives are similar to mortgage-backed securities. And what this kind of diagram is showing is what that process looks like under the hood when you stake through a decentralized staking protocol. And the process is you, as someone who wants to stake, deposits your ETH into this protocol. Let's say it's like Rocket Pool. And then Rocket Pool will then go and allocate that ETH to different validators in this kind of network, right? So it's almost like a two-sided marketplace. Investors on one side who want to stake, validators on the other side who want ETH to stake with. And if you think about it, the validators are, in a sense, receiving loans on ETH because they don't actually have to put up the entire 32 ETH that they need to stake. They're actually borrowing, part of that 32 ETH to stake, and they need to pay it back. Now that's interesting because you when you hold this kind of ETH derivative that you get from depositing your ETH into one of these decentralized staking protocols, well, what does that ETH actually represent? It is a claim on the underlying ETH that is being loaned out to all these validators. So one analogy to think about this is that imagine like each validator loan is kind of like a mortgage, and then you're packaging those validator loans into a security, like a mortgage-backed security. And that's essentially what this derivative ETH is. It's kind of just like this package of all these different, loans to different validators. And I think it's also interesting, it's actually where I think these decentralized staking protocols will actually be preferable as a form of ETH derivative, is that it actually diversifies the underlying, just like mortgage-backed securities diversify the underlying risk of a single mortgage failing. Similarly, like a derivative ETH that's issued from one of these staking protocols diversifies the risk that individual validator fails. So that's a lot better than if you were to go and stake with a centralized service provider, like say an exchange, and if their validator fails, then that ETH derivative is like it's toast. And I think that that'll probably be why people will prefer this, combined with the fact that, and this is very protocol specific, but in the case with like Rocket Pool, well, validators are actually in a position of first loss if they get penalized or slashed for behaving maliciously. So, validators have to put up 16 ETH. They get the other 16 ETH from stakers in the protocol. If it was the case where they got slashed for 5 ETH, then that validator would lose that 5 ETH as well. So from the perspective of someone who holds this derivative ETH, not only do you get to diversify the validator risk, but you also get kind of like insurance against being penalized or losing because the validator misbehaves. So yeah, that was kind of the idea of these staking pools, and how big they could be when Ethereum, I keep saying when Ethereum 2.0, now that Ethereum 2.0 has launched.
Get used to it, brother.
Yeah,
so before I hop in, Wilson, you want to add anything?
I just think this is kind of one of the most interesting aspects of phase zero, this idea of the illiquidity dilemma for validators or prospective stakers, and how this is going to play out between the centralized protocols versus centralized protocols. And I know the centralized staking protocols are going to, in a sense, mitigate that risk, that validator risk, a little bit more. But I will say, like, if you're staking with Coinbase, most likely they're probably going to insure any losses off of that. But I think there's a lot more that could go on. One of the clear benefits of utilizing these decentralized services is obviously you're not using a custodial service, so you still kind of have that ownership over, and exactly what Ryan was saying. There's a built-in insurance protocol as well.
Right. So here's when I was reading through the report, this was one of my favorite sections, and the reason why especially this little graphic right here, and the reason why I got so excited about it is because like it opened up my eyes to what like could be a very, very competitive world in the world of staking pools. Probably both on the centralized and decentralized ends of the spectrum. They're all probably competing on the same few things. And it's basically all competing for like ETH deposits into my staking pool. But where we are eliminating mining pools, we are creating the possibility of staking pools, right? And that can be decentralized or centralized. But no matter what characteristics or the parameters of how these staking pools come to be, they're going to be competing on the same few things. One of them is uptime. How does a pool incentivize maximum uptime from its validators? Because that's going to create the strongest amount of ROI in the derivative token that each staking pool is going to inevitably issue, right? Like you deposit your 32 ETH, you get 32 staked ETH derivative tokens. That's one of the articles that you guys have cited here from Dan Elitzer. And so like I'm really bullish on like this competition to be the best staking pool system to really add overall to Ethereum's security, because it's really amping up the incentives to have strong uptimes, to be staking as much ETH as possible. And they're going to be fighting for generating liquidity on their staked ETH derivative token. So like you heard it here first. Yield farming on staked ETH derivative tokens is totally going to be a thing. Like people are going to be compensated for providing liquidity for like whether it's like RETH for the Rocket Pool token or Coin US or ETHC for the Coinbase token. I don't know. You're going to get rewards for providing liquidity between staking pools and Ether. And that was kind of like my big takeaway from this part of this section. And so I thought that this part was really ingenious, and this graphic especially was a nice add to the piece as a whole.
Yeah, you know what this made me think of too, just to add to what David was saying, is basically like, you know, the stablecoin wars that we have?
Yeah.
Like we're going to have the ETH staking wars in a big way, right? So Ether is already the most liquid asset on Ethereum. Staked Ether is going to be the second most liquid asset, right? But staked Ether will have all of these different flavors. Right. So there's not like just one US dollar on Ethereum. There's USDC and there's, Tether and there's DAI and all of these things. And that range will be from centralized to decentralized. And then because of like Dan Elitzer, who you sourced here, super fluid collateral, right? We get to mix and match all these things too. So we could create some basket of, centralized staked ETH if we want. And it's a blend of Binance and Coinbase and Kraken, right? Yeah. And then we could have because one dimension, David, that you mentioned uptime, but another dimension that's probably going to be important is the degree of trustlessness of the asset itself, right? So we talk a lot about economic bandwidth, and in particular, trustless economic bandwidth. Well, and you guys cited the protocol sync thesis. Thank you, by the way, we're propagating that. The protocol sync thesis would predict that DeFi is going to want to build on the most trustless form of staked ETH in the Ethereum ecosystem too. So rather than build on Binance's version of ETH, right, that is completely custodial staked ETH, maybe you want Rocket Pool because that is more decentralized, or maybe you want this blend of decentralized. Anyway, We could go down the rabbit hole here, but you guys have unlocked something, I think, in both of our minds with respect to how the future could pan out with all of these ether bonds that are floating around. And it's super exciting to think about.
Yeah, honestly, I think both of you guys nailed it. I think when we were researching this, this was probably one of the most surprising things when when we were looking through it, because of how little it has been discussed. So obviously, like Dan had that great article on the death of Ethereum, but outside of that, it just didn't seem like there was an equal amount of coverage for how big an opportunity this ETH derivative space is. And yeah, I think there's going to be, kind of like you said, there's going to be like incentivized pools between like ETH and derivative ETH to build liquidity between those two. There's going to be yield farming opportunities with derivative ETH. There's going to be the opportunity to like lend and borrow derivative ETH, like use it as collateral to mint DAI, like all these different things. There's also going to be like structured products that will probably be built packaging these different derivative ETH together. It's really like, I think the possibilities are really endless. I mean, there probably be like opportunities for you to like swap your variable yields in your staked ETH for like a fixed one.
That's interesting.
So there's like a whole ton of products that I imagine will be built using this derivative ETH as a primitive, and I think they'll be very popular because no one wants. I mean, everyone would prefer liquidity over illiquidity, and this is probably going to be the way it happens when there's no withdrawals for your staked ETH.
Well, Ryan, Wilson, I really appreciate you guys coming on and talking about the Messari report. Ryan, I'm looking forward to talking to you tomorrow at the Messari conference online as well.
Yeah, no, looking forward to it.
So you guys have done a fantastic job with this report. Bankless Nation, this is the report that you send to your financially minded friends who have not yet got into crypto. This is the report that you send to your friends and family if they're trying to learn about Ethereum. Ryan and Wilson here have done a bang up job, really just going to every single nook and cranny of Ethereum subject matter and getting it relayed into this report. So tip of the hat for really pushing the narrative forward, pushing why we're doing this and pushing why Ethereum. Really, really appreciate your guys' work.
Yeah, seriously, guys, thanks for getting it right. Thank you.
It's not easy.
Thanks for having us on.
Thank you, guys. Yeah, really, really appreciate it.
Absolutely, guys. Take care. Thanks a lot.
All right, Bankless Nation, we're going to turn to sponsors really quick, just to talk, and then afterwards, me and Ryan are going to talk about just, ETH2's launch. So we're going to reflect on that a little bit. So stay tuned as we get through some of our fantastic sponsors that make this show possible. Hey guys, the next sponsor is Ledger, and Ledger is running a 40% off Black Friday week sale. So if you haven't gotten your Ledger yet, you are in luck. For the week of the 23rd through the 30th, you can get 40% off of all Ledgers on the Ledger website. So if you are still using a hot wallet, or you're just looking to get a backup, maybe for a multi-sig or just for some more redundancy, now is the time to go get that Ledger. There's a link in the show notes that can get you that 40% off Black Friday deal. If you want to live a bankless life, you need to get a hardware wallet. There is no alternative for storing your crypto in a self-sovereign fashion. That's why I have 4 ledgers that I use to manage my different crypto assets, using the Ledger Live account as well. Ledger Live is like your home base for managing your Ethereum, DeFi, and crypto accounts. It does a really good job of aggregating all of your different Ethereum wallets if you are the type of person that uses more than one. But you can also add other cryptocurrencies like Bitcoin or Cosmos or whatever your preferred blockchain is. And then it will display an aggregate portfolio of all your accounts at the main page. One thing that Ledger is doing a really good job of is enabling all the money verbs that me and Ryan talk about with the Bankless Skill Cube enabled in the Ledger Live app. So right now in the Ledger Live app, you can buy, sell, lend, swap, and stake your crypto assets, which is doing a really good job of fulfilling all of the money verbs in the Bankless Skill Cube. Something that's new to Ledger Live is Ledger Swap, where you can swap assets one for another directly inside the Ledger Live application, ensuring trustlessness in your financial activity on Ethereum and on Bitcoin. If you want to learn more about what you can do with a ledger, go to the blog post, The Power of Ledger Live, on the Ledger website. where they share some of the more advanced things that you can do with your ledger that you might not have known about. There's a link in the show notes that will take you to the Ledger shop where you can get your preferred Ledger hardware wallets. I personally like the Ledger Nano X, but I also have both. They're both great options. When you own a ledger, you own your own assets in the way that they have been designed to be held by the user and the user alone. So go get your ledger today to make sure that you are as self-sovereign as possible. The Bankless State of the Nations are brought to you by YEARN. YEARN is DeFi's first self-building community-run project, which I just get really, really excited about. YEARN is a system that seeks out yield in DeFi, and it does that in a number of different ways. A very aggressive way is with the vaults, where you can deposit your preferred asset of choice, and different DeFi experts will come in and generate a strategy for what to do with your deposited token, right? And so it'll go find ways to get yield in that deposited token in DeFi. For those who want to just earn yield on their stablecoins, the Earn system is for you, where you can deposit your preferred stablecoin and YEARN will go and figure out which money market on DeFi in DeFi is producing the best interest rate, whether it's DYDX, it's Compound, or Aave. It looks around DeFi to see where the yield is coming from, and it directs stablecoins automatically so you don't have to. Check them out at yearn.finance to get started, and also check out the stats page to see what other people are doing as well.
Bankless Nation, we are back from the sponsors. David, that was fantastic. Like, I felt like Watkins and Wilson are kindred spirits. Maybe they're the Ryan and David of Messari.
Well, one of them is literally Ryan. Yeah.
Well, okay, literally. I mean, I think that it was the first time, to be honest, I talked to analysts, crypto analysts specifically, who actually like got it, right? Like they totally understood, and they, I don't know, I just nothing I disagreed with in that. So like, what was your take on that report? Is this the one that gets into institutions? Did we just advance a step on the Ethereum education and Ethereum narrative side?
Yeah, I think we did. And a lot of what was included in that report was like stuff that you and me have been chewing on like since 2018, I think. Like, Ryan, even before we knew each other, like I think the first time we actually like talked, we just hopped into a Zoom just to share ideas about stuff, right? And I don't think you and me at the time didn't really have the words that we use now to communicate things of that nature. But like, we talked about like other teams that were trying to get to Ethereum 2.0 before the actual Ethereum team could, and things of this nature. But like, I think the beginning of that talk that we had in 2018 was like talking about things like credible neutrality, talking about things about the importance of Ether as an asset, Ether as a money, defining Ether and like narratives. And that conversation that we had like over 2.5 years ago, I think has turned into some of these like some of just the canon truth about what Ether the asset is and what Ethereum the platform is. And so it's taken like 2-3 long years for that to finally like bubble up to the surface and get into something that's like a legitimate institutional report coming out of Messari. So it's not like Rome was built in a day. Like, we've been hammering some of these points for years now. And it's finally kind of starting to like rise up to the top and be put into like an actual fantastic PDF by the Messari team.
Yeah, it's super cool to see that happen. And a lot of like, sometimes with the Bankless thesis and Bankless ideas, like the ideas are novel and new, but a lot of times like what we're doing is basically what they did, which is we're synthesizing things that we see in the community and ideas and posts that people like Vitalik write, or like that, like synthesizing the social sentiment and trying to put that into metaphors and words and easy to understand models. And this just felt like the next extension of that is basically like, we have a reach with Bankless, but that reach is also limited. I mean, people who aren't on YouTube, people who don't do podcasts, people who don't like newsletters, right? We struggle to reach everybody. Right. So the more people that we have talking about this narrative, right, like the better. So we're just seeing it spread. And I think part of this is like the Bankless community, quite frankly, because like the Bankless community helps get guests on our shows. The Bankless community helps spread like the narratives and the memes and helps really support us. So what this is it's the next iteration of the social layer that we talk about so much, which almost like it rests on very simple models, or like, as we call them, memes. And those memes like propagate up the stack. And pretty soon, the next level after Messari, right? This is now mainstream crypto. So like we're this like niche, right? And then we got mainstream crypto. And the next level is Wall Street Journal and CNBC, right? And I don't know if that happens next year or if that happens maybe 2022, but I'm not going to be surprised, David, if in a few years, everybody, the common way to think about Ether as an asset is, oh, it's like an internet bond. It's like a digital bond. It's like Bitcoin it's just digital gold, right? Like Bitcoin propagated its narrative in the exact same way. So absolutely, super exciting to start seeing that.
Yeah, one thing that I think really excites me about the future is like, to me and to you and to the Ethereum culture and community, like Ethereum is inherently good. It's a good thing, right? It's a maybe it's a neutral good, lawful good, or I don't know, but it is good, right? And one of the reasons why it is good is the protocol sync thesis. Like things that are good, incredibly neutral, like balanced, fall down to the bottom of the protocol sync. And this is something that they cited in their report. They talked about how like the credible neutrality of a protocol makes it more socially scalable to the whole world. That's something that they cited in their report. And if this Messari report lands on the desk of some Wall Street individual, there's a link between Wall Street and the protocol sync thesis. And the protocol, what inherently the protocol sync thesis is the promotion of global public goods, public financial internet-based infrastructure that are credibly neutral, that reach out to the whole entire world. And all of a sudden, so to me, what Ethereum does is all of a sudden there's generating alignment between somebody as far away from alignment as Wall Street to the creation of global financial public good infrastructure on the internet. And that's the power of Ethereum. It's linking people on Wall Street to open permissionless protocols that just are going to better everyone's lives. And so to me, it's just very validating of like why we are here in this space. Because like it's to do good, and we have the path to do that.
Yeah, absolutely. Not only the path to do that too, right? So the second piece, maybe we could talk about this morning and the launch of ETH 2.0, right? So I think partially for a while, it's felt like we've been prophets in the wilderness and no one's listening, because everyone's like, yeah, like, sure, tell us when ETH staking ships.
Right.
Like, tell us when, proof of work and staking merge into one chain and Ether issuance drops down to less than 1%, right? Then maybe we'll believe you, right? And our take on that, I think, David, is like, if you wait for all of these things to happen, like, let's take it to the extreme. Let's say you wait until Ethereum is the globally adopted permissionless financial infrastructure for the world. It's the internet of money, right? Maybe that happens in the next decade. Maybe it takes longer. Maybe it doesn't happen. But if you wait until that happens for the evidence, you're going to be buying ETH at 50K an ETH, right?
From
like,
me.
I don't know, man. I might not sell. I might be just staking.
Right.
Like, so if part of this, I think, is where I was getting to full circle, is the message starts to have more credibility when some of these things are actively shipping. And now that we have ETH2 shipping, as we witnessed this morning, it was basically like the launch could not have gone any better, right? Stuff can still happen in the future. We're talking to Lucas Campbell on the Bankless team, and he was like, guys, something bad's going to happen at some point in time over the next year, right? Like, probably this is still an early kind of network. There could be some bumps along the road, but the launch went super smoothly. And the sentiment, the narrative over the past 2 years has been ETH2 will never launch, and none of these things will happen or come to fruition. And I think when reality starts to kick in and things are shipping, it just shakes that narrative. Right. Maybe it's no accident that I feel like is it just me, or it feels like on crypto Twitter, at least, there's a lot of angry Bitcoin maximalists.
Yep. Unhinged maximalists.
I don't know. It just seems like that. They're throwing these like red herrings about if you do something with Ether, it's going to be like a taxable event.
Right. The IRS is going to bring Ethereum down.
Right.
It's like grasping at straws, man.
it just feels like maybe it's a reaction to, wow, Ethereum is actually shipping. That thing that we said would never happen is actually happening.
Right.
By the way, I'm looking at myself. Does it look like I'm wearing lipstick? Like my lips are super red, dude.
Yeah, you
I don't know if you got a weird filter or what.
you got the pretty filter on.
I'm not wearing lipstick, guys, but whatever.
Yeah. So like the funny thing about like Bitcoiner narratives is like the Bitcoiner narratives have kind of painted themselves into a corner where they're actually out of control of some particular things that could like pull out all the Jenga blocks from the tower. Like a decent amount of Bitcoiner narrative is that proof of stake can't work. A decent amount of Bitcoiner narrative is that Ethereum can't ship. A decent amount of Bitcoiner narrative is that you don't scale a blockchain. If all of those things and others like turn out to be not true and instead like actually plausible, then like one by one you're taking ammo out of the tool belt of a community that is just frankly obsessed with making sure that Bitcoin is the only blockchain that the crypto economic blockchain world ever produces.
To be clear, when you talk about Bitcoin, like thinking you're talking about maximalists, right?
Yes,
There are so many Bitcoin.
Yeah.
There are so many Bitcoiners, and at some level, maybe this is the more silent majority who, like, they hold Ether too. They want any bankless system to succeed, but there are definitely many maximalists who think of things in just binary, like either Bitcoin wins or Bitcoin has to win, and everything else has to lose. So yeah, anyway, successful launch this morning. So how are you feeling about things at this moment? You're like, we are December 2020. We're getting ready to go into 2021. How are you feeling on this day, December in 2020, about just, I guess, your crypto journey and the future of Ethereum, future of Bitcoin?
Yeah, I feel pretty split because one part of me is like, and especially at the same time, the rise from Ether price going from like 300 to 600, and also the launch of Ethereum phase 0 staking, like, yeah, like duh, it's here. Like we've told you it's been coming. Like, yes, I've seen it coming, and now it's here. Like now today's the day. It's like my birthday doesn't surprise me every single year when it comes around either. Like some of these things are just like expected, and so like yeah, maybe to the outside world, like this is like, oh, like Ethereum 2 is actually shipped, but to me it's like, well, some of these things are just obvious. Like yeah, Ethereum 2 shipped today. Like cool, but also Ethereum's becoming ready for the world. And the world is becoming more and more ready to accept Ethereum. And so like, this is why Ethereum scaling is so important, is because we've been beating this drum on the Bankless pod. Ethereum is a platform for trustless institutions, and the institutions of the legacy world are breaking down, right? And so we need to find different ways to produce new institutions on Ethereum. And I think and as Ethereum is becoming more ready for the world is becoming more ready for Ethereum. And so at the same time, while I see like, oh, phase 0 launch, like, yay, like, cool, we did it. Like, today's the day. And maybe I'm not as excited as other people just because like I kind of saw it coming. At the same time, I'm so incredibly like optimistic as to like this arc that is seemingly like getting really, really close to being complete, that is going to save a lot of people from a lot of suffering in the world.
Does it feel like things are starting to happen faster now?
Things
like
are happening
velocity
really fast.
Has increased.
Time moves
it's accelerating
really quickly right now. Like, never mind 24 hours. It's 24 hours or units of time. More progress is happening per unit of time, and therefore it feels like we're moving forward through time at a faster tick rate.
Absolutely. At some level, it just feels like the decade could be over in a snap of the fingers. Oh, God. Right? And just... Well, don't I don't mean to get existential on you, but like, I just feel like velocity is increasing in this space. Over the past, I don't know, year and a half, 2 years, it's really picked up. And I have been frankly blown away with even the velocity of some projects on Ethereum, DeFi projects that start out so small, and suddenly you wake up a few months later and they're doing billions of dollars in transactions and value, right? And like, I'm wondering what the next phase of this looks like, because if it continues to grow, right, it's going to start consuming parts of the mainstream world. Right now, we are still in this niche where crypto is weird and like you can't talk to anyone about DeFi and no one really knows what Uniswap is, right? And there's maybe 1 million people using this. But like last year at this time, there was less than 100,000 people using this.
Yeah.
So if you think about like just the Bill Gates quote, is, people don't really think in like log scale, basically. And you think about log scale, I mean, where are we going to be in 5 years from now, right? It could be pretty incredible.
The Bill Gates quote that I know is that you overestimate what you can do in 2 years and you underestimate what you can do in 10 years. Yeah. And so like I always anchor my perception onto 2017 because that's when I got into crypto, right? And it's like, all right, 2017, I thought like all of the world was going to be crypto enabled by like the next year. Like it was going to be 2018 and like the world just runs on crypto. And that was just like my harebrained like mania mind that I had at the time. And so like moving into Bill Gates's quote, like we overestimate what we can do in 2 years. Okay, well that was 2019. And then we underestimate what we can do in 10 years, right? And so now we're at like 3.5 years past 2017 when I got into the world of crypto. And so now it feels like we're actually at the meeting point where like what gets developed in the next year actually starts to exceed my expectations of what I could have envisioned back in 2017. And it doesn't stop there. It just like keeps on going. It just keeps on going. And again, there's just an inherent demand for a platform like Ether, right? But like Ethereum, like think of all the jobs that Ethereum is going to create in a world where jobs are extremely hard to find. Like just any sort of DeFi protocol or platform or company is going to be hiring in the next 2 to 3 to 4 years. And there's also going to be more of them. Like a lot of economic activity is going to be put onto Ethereum, but also generative outside of Ethereum as well. Like it's just going to be the savior of the world. It's going to save the whole world.
Well, David, chances are your kids may work for a DAO or for a protocol rather than a company. I think that's kind of the trajectory we're on.
Yeah. Speaking of kids, not my kids, but my sister is due in February, and I just bought a B is for Bufficorn book from John Poller, who runs the ETH Denver. And so just FYI, for any other families that are having COVID babies, like my sister, get the B is for Bufficorn book because it's a great children's book to indoctrinate your kids with.
All right. Well, we should include that in the show notes. All right, David, we should maybe wrap it up. This has been fantastic. Okay. Bankless Nation, thanks for hanging with us on the State of the Nation extra long, but today is an extra special day with the ETH2 launch and this fantastic report from Messari. It's been a pleasure to be with you. Of course, none of this was financial advice. ETH is risky. So is Bitcoin. So is DeFi. Everything we talk about is relatively risky, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.